let's look at the cost of goods manufactured. Now, when we're talking about inventory, inventory is slightly different between a merchandising company and a manufacturing company. On the balance sheet, a merchandising company will only have one account for inventory because a merchandising company is buying a finished product from a supplier and turning around and reselling it to the consumer. However, a manufacturing company is actually creating those products, so they have three inventory accounts: raw materials, work in process, and finished goods. This allows the inventory accounting to match the actual creation and flow of the products they're making. Now, our current assets section of our balance sheet is always presented in order of liquidity, so that's why the finished goods is on the top, because it is the most liquid or ready to be sold of the three types of inventory. Now let's look at the income statement side. This is a multi-step income statement. You can find a multi-step income statement in both a merchandiser and a manufacturer, but you will most often see it with the manufacturing companies. On the left here is the basic formula that is used to calculate the multi-step income statement. The bolded items are the subtotals that are found within the income statement to help give investors additional information. And so what we're focusing on right now in particular is this cost of goods sold, because it's calculated differently between a merchandising company and a manufacturing company. So here we have a comparison of the two. On the left is the basic formula for a merchandising company, and since a merchandising company is buying finished products, they are adding in cost of goods purchased to their beginning inventory to arrive at cost of goods available for sale. However, on a manufacturing company, because they are creating those products, they are adding in the cost of goods manufactured to arrive at their total cost of goods available for sale. And so when we look at the formula for cost of goods sold for a manufacturing company, we're going to take the beginning finished goods inventory plus cost of goods manufactured to arrive at our cost of goods available for sale, and then we can subtract out our ending finished goods inventory to arrive at cost of goods sold. Remember, cost of goods manufactured is actually the cost of the goods that the company finished manufacturing during the period. It's the ones they finished creating. So now let's look at how we actually get that cost of goods manufactured number. This is a cost of goods manufactured schedule. It's often shown as a separate schedule, but it could be incorporated into a multi-step income statement. So our cost of goods manufactured schedule in the middle here is calculating our total manufacturing costs. Those are our current period costs for creating the products. And so those include the direct materials used, the direct labor, and the manufacturing overhead for the period. We take that total manufacturing costs, add in our beginning work in process, what was started at the beginning of the period, and that gets you your total cost of work in process, which is everything that was started at the beginning of the period plus all of the manufacturing costs during the period. Next, we can take that total cost of work in process that we just calculated, subtract out ending work in process, what's still being worked on, and that gets your cost of goods manufactured, which again is your cost of goods that you finished making during the period. So let's look at putting all of this information together to calculate the cost of goods manufactured. So here we have case A and case B and some items of information and also some missing elements that you can try and find. On the right are the basic formulas for the cost of goods manufactured schedule. So I recommend that you pause the video for a second and see if you can find the missing items in case A and case B. They are two separate cases. They are not related. It's two separate sets of numbers. Okay, so I'll give you a second to go ahead and try and calculate that information. Okay, now let's go over the answers. So under case A, our first missing item there is direct materials used, which is the lowercase a. And so to find that item, we need to use our top formula, which tells us our direct materials used plus direct labor plus manufacturing overhead equals total manufacturing costs. So if we plug that into a formula here, we have A, our missing element, plus the 57,000 plus the 46,500 equals our total manufacturing costs. So now we can solve for A and find that the correct answer is $92,150. Now let's look at our next missing item, B, which is work in process beginning on January 1. In order to find our item B, we need to use the next formula, which takes our work in process beginning plus manufacturing costs, which is what we have as $195,650, equals our total cost of work in process. So now we can solve for that missing item and see that B should be $25,850. Next, let's do C. C is going to use our last formula down there, which takes our total cost of work in process minus work in process as of December 31 to calculate the cost of goods that we finished manufacturing during the period. And so if we solve for C, we can find that it's $36,225. Now let's go through case B. Case B is a little bit more difficult because the items are not necessarily right there at the beginning of the formula. So again, in case B, our first item missing is D, which is our direct labor number. So we're back to that top formula. We can plug in the numbers here into our formula, find our missing item of D, and determine that it's $48,700. Now for E, we're taking a step down to the next level of calculation. We can find that our work in process beginning plus our total manufacturing costs equals total cost of work in process. Plug that into our formula and find our missing element, which is $83,300. And lastly, under case B, we are missing our cost of goods manufactured for F. That's going to be our bottom formula. And it's fairly straightforward. We're going to take our total cost of work in process of $337,000 minus our ending work in process of $70,000, and we can determine then that our cost of goods manufactured is $267,000. Okay, so I hope that this video has helped you to understand the cost of goods manufactured schedule, the various formulas that are involved in calculating cost of goods manufactured and cost of goods sold, and all the information that you need in order to put together that multi-step income statement.